Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the 4-hour chart with the bearish scenario where we are looking for a continuation to the downside in one of the three scenarios. And that may sound very complex, but as you can see, I only have one dotted line on my chart to make things very simple. So let me explain in more detail. If we look at an ABC, we are looking for a 1, 2, 3, 4, 5 wave structure in wave A, looking for a 3-wave corrective structure in B, and a 5-wave structure to the downside in C before then continuation to the upside towards 50k. In a impulse to the downside, we're looking for a wave 1 having a 5-wave structure, look for a 3-wave structure in 2 before then a much bigger move to the downside in a wave 3 for much lower prices, and in a WXY we're looking for an A, B, C, a 3-wave move, then another 3-wave structure in X, and another 3-wave structure to the downside in a wave Y, after which we then also expect continuation to the upside. However, when we look at the corrective structure inside B, 2 or X at the moment, and this move of the lows towards the upside, the probabilities are high that this is an impulsive structure. And in a corrective pattern, we are then looking for a wave A, B and a wave C, a zigzag structure. So inside B, 2 or X, we are pretty much looking for the same corrective structure, and based on the future price action that we still get in this B, 2 or X, and based on the beginning of a move to the downside, we can reassess the probabilities and really get more clarity on what scenario has the highest probability here. Now, when we look at the bullish scenario, we're also looking at similar price action, but this time we're looking for an impulsive structure. So not a 3-wave move and then a move down, but now we have a 3-wave structure, but we expect continuation for later another 4 and a 5. In this scenario, we're then looking for a wave 1, 2, and 3. If we put wave 1 at the high here, then we can take a Fibonacci from the low to the high to get the Fibonacci targets for a wave 2. Common target for wave 2 is the 05 to the 786 area. A less common target is the 382, which we just missed out on hitting, as you can see over here. And the 886 is a rare target for wave 2. The invalidation for this scenario is price moving below the low at 38.5k. If we then zoom into the 1-hour chart, then the bearish scenario is that wave A or 1 is already finished, and we are looking for a wave B or a wave 2. Preferably this wave B or 2 is ending after the 0.382 Fib time, taken from the low to the high of A or 1, which is sitting on the 2nd of February, 4 AM Central European Time. Now, the common target area for your wave B is between the 382 and the 886, 41.8k to 39.1k, and we just missed out on hitting the 382 on my chart here. And the common target for a wave 2 is between the 05 and the 786, which is between 41.1k and 39.6k. That means that in this scenario, we are expecting a bigger corrective structure to the downside before then continuation up in a wave C or a wave 3. And this is where the 30-minute count here comes in. So the first structure to the downside is then a wave A, B, C, a 3-wave structure in a 5-wave A, 3-wave B, 5-wave C. B here hit the 886. That is important because any move coming off the 886 has a higher probability of being a wave C or a wave Y, increasing the probabilities to at a later stage go back up and take the double top that we created there. Common target for your wave C is between the 1 and the 1.618 trend-based sub-extension, taken from the high to the low of A to the high of B, which as you can see is nicely respected at the moment. However, this ABC is then only a wave A or a wave W, as in this scenario, we are looking for a move to the upside before another continuation to the downside. And two possible scenarios are on the chart here. We then have a wave W zigzag. We're looking for an X. Common target for wave X is the 382 to the 886, taken from the high to the current low that we have, giving us a target between 42.6 and 43.6k, before then continuation to the downside. The second scenario is a flat structure, where we have an ABC in a wave A in blue, we're going to be looking for another zigzag to the upside, preferably in a wave B, which is the most common pattern in a wave B, where the common target area for B is the 1.236 to the 1.38 taken from the high to the current low here, which is between 44.3k and 44.6k, and then we look for another move towards the downside. What is interesting in these scenarios is the extra support and resistance boxes that we have on my chart. At the moment here we are ranging on support, but we still have the weekly level just below at 41.5k. Above us we have a little bit of resistance, 42.6 to 42.8k. Interesting for a potential X, of course, but when we look at the potential B here, 43.9k to 44.7k is interesting additional resistance, and to the downside, if we would lose this weekly level at 41.5k, there is not too much support here, and then the probabilities definitely increase to move to the blue box that I have here, 39.9k to 40.1k. If we look at the bullish scenario on the 1 hour chart, then the impulse to the upside is not yet finished. So we're then looking for a wave 1, 2, 3, 4, 5. Wave 4 here is longer than wave 2 in time because of the vertical line that you see on the chart and price moving behind this vertical line, which is the 1-to-1 fib time taken from the high to the low of 2 to the high of 3, comparing 2 with 4. And the fact that 4 now moved after this line means it's longer than wave 2. Common target for this wave 4 is the 236 to the 0.5 Fibonacci taken from the low of 2 to the high of 3. Invalidation is the 0.618 at 41.1k. In this scenario, we also expect a move towards the upside, but that move to the upside should not be corrective, as in this scenario we want to see corrective structures to the upside. No, in this scenario we are looking for an impulsive structure to the upside in a wave 5 to finish A or 1. Then we are looking for a corrective structure down in a B or 2, before then continuation to the upside in a wave C or a wave 3. Now, a small detail on the chart at the moment on the 5-minute time frame is that price made a low, moved towards the upside, created a second low, but the second low hit the 886. As mentioned earlier, the 886 is a common target for a wave B or a wave X, but it is a rare target for a wave 2, meaning the probabilities of this move to the upside are higher for this to be a wave C or a wave Y, which increases the probabilities to later come back down and take the double bottom. And as mentioned, at least we still have a weekly level below price as well here at 41.5k, which is interesting, and of course we are ranging in support at the moment. If we look at the CVD divergences, then we do have bullish CVD divergences here on the 1 hour chart or on the 15 if you zoom out. However, I always prefer to see local strength. Yes, there are some bullish CVDs you can see here with this pivot on the left, but what I want to see is strength on the right side over here. And at the moment, there is not yet too much going on locally. So if we then look at the probabilities of the different scenarios, then on the low time frame, which is the 4-hour scenarios at the beginning, the probabilities are neutral, ABC, 1 to 3, or a WXY, because we are expecting a similar price section to the upside, and then based on that price section and eventually the move down, we can reassess the probabilities. On the micro, which is this move to the upside here, we are looking for a bigger retracement to come, right? Either we are looking for one more high in a wave 5 before then a bigger continuation to the downside, or we are looking for this scenario here where A or 1 is finished and we already started a B or 2. But also here the price action is quite similar. We are expecting a move back towards the upside, either in an X and then a Y, in a B or then a C, or we are looking for a wave 5. So as you can see, there's nice overlap here between the different scenarios, and based on the move that we get to the upside, right, we can reassess the probabilities. After a move to the upside, we are going to expect a move back towards the downside. After a 5, we look for a 3-wave correction in B or 2. And if we get the move to the upside here in an X and a B, we want to see corrective structures, and we're going to expect also another move towards the downside for a bigger corrective structure to come. Locally on the 5-minute chart, there is the possibility that price is going to make one more low because of the 886 touch that we have at the bottom, before then a retracement to the upside. But in general, right, we are looking for for a move towards the upside here before then a deeper retracement to the downside, and based on the move that we get, we can reassess the probabilities of what scenario has the highest probability. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.